Hey, this is Justin with daytradethemarkets.com. Wanted to give a couple examples of the 2 out of 3 concept that I like to teach. Looking at today's market in the ES, it's about 2 o'clock Eastern time here on Thursday, the 14th of December, 2017. There were just a couple of really interesting examples today from the ES that I thought I would mention. So thought I'd do it before the day even ends. The idea here that the 2 out of 3 concept is that we want to be able to put the market in context, okay? We don't just want to be trade entry signal followers. That doesn't work in the long run. What you have to be able to do to be a successful day trader, certainly in my opinion, in my experience, and in the experience of people that you know that I've worked with, is that you have to have an edge that's repeatable. And you can't, the only way to do that is you have to be able to put the market in context. You have to be able to tell the market story, okay? You can't just blindly follow, when this indicator does that and that indicator does this, get in. That's not going to hold up over the long run. The way that I have found to find a repeatable edge, however, is to look at 3 different evidence points. And these are the 3 that I teach. You could certainly bring others to the party. If you have a couple of other things that you like to look at, what I have found with people is that a lot of times when they stop looking at it so much in a vacuum and start to look at it more in the context of the bigger picture, all of a sudden those other indicators or other setups start to work a little bit better because the edge is increased. You're making better sense of the market. So starting to blab away here. Let me just talk about the evidence points that I like to talk about. First is the big picture bias, okay? That's the long-term market analysis. We know that before the day starts, okay? We have that, I put that in the daily market assistant each day in our website. The second part is what we call the zone evidence, and this is a little bit different take on traditional support and resistance, but essentially it's intermediate term analysis of the market. This is known prior to the day starting as well. Then the third part is what we call box and aggression bar evidence. Okay, this is short term. This is we're gonna determine this as the day is unfolding. Okay, this is going to tell us what's going on right now under the surface of the market. Okay, the idea is that if you have one of these pieces of evidence, for example, you can make the trade work, but it's pretty risky. However, you get 2 out of 3, you've got a pretty solid edge. If you get all 3 out of 3, you've got a really strong edge. It doesn't by any means, and let me be very clear, there's a lot of, mistruths that people tell in this industry. There's no such thing as 85% win rates and making money every single day on every single trade and catching every trade of every move of every day. That's just unrealistic. That's not real. You're not going to make it if that's what you're looking for. What we're looking for is a strong edge. And when you have a 3 out of 3 or a 2 out of 3, you've got a pretty good edge. And it's the sort of thing that's not going to work every single time, but you know it's repeatable. You know that you can kind of depend on that over time. Okay? So if we look at that from today's example, what we've got is a situation where going into the day, we know that our big picture bias is up with caution. Okay, that's basically bullish. We know that all things equal on the big picture, we would rather go long if we can. We're willing to trade against that big picture, okay, but we're going to need a little bit more evidence on the day or on the zone level to be able to go against the big picture bias. Now, heading into the day as well, our zone evidence here, and that's known before the day. This is one of the zones that we have, basically from 26.74.50 to, or I should say 26.74 quarter to 26.68.50. Okay, so knowing going into the day, that's a zone. And so what that means is if we open in the zone like we do up here, we would expect to find some support down here, okay, and then we would expect buyers to come in. If they can't, or if they can't hold it, and eventually sellers are able to break below that zone, that's a bearish indication. Okay. Conversely, if the market was starting below and we came up to the zone, you'd expect resistance. Okay, and same thing here is if the market came up here, which it didn't, we would expect some resistance there. But if it was strong enough to break through there, that would be considered a bullish indication. Okay, so we're just kind of looking at how the market reacts relative to this zone, both to give us ideas of support and resistance areas, and also to give us kind of bullish or bearish weightings of how strong the market is. Okay, now we've also got these boxes. Here's a buying box. Here's a couple selling boxes that have formed so far today. I don't know. We might get more follow through lower. The way it's going, that wouldn't surprise me. But those are going to form during the day. Okay. So actually, you know what I'll do? I'm going to take off the boxes and run this back to the start of the day and kind of go through almost like step by step, box by box, some of the logic and the way that we would try to look at that. Okay, so let's take this back to the start of the day, basically. And I know this, we know what's going to happen here, but I like to just think about it or try to explain it to you from the right edge of the screen. because that, or the right edge of the chart, because that's how we're going to think about it if we're looking at this live, okay? So what we have to start today is we have actually it's an up market, up bias here. If we break below here, it's up with caution. Either way, it's a bigger picture is leaning up. We'd rather be long if we can. Now we open within this containment, within this zone. If we come down here to the zone support part of the market, we would expect support down there. And that's an option for a trade if you want it, and we can actually run that forward. If we look at it right here, when we come down to this area right here, maybe right here when we get this level 2 buying aggression bar, you can see we've not accepted below. Okay, we're still kind of testing this area of support. Excuse me. We're testing this area of support, and we get a level 2 buying bar. So that's our first potential opportunity. I'd say this is for more of an aggressive trader, but the idea here is if we look at what we have, our big picture bias is up. Okay, that's a bullish indication in isolation. Okay, on our zone level, we are testing the area of zone support. That is a bullish indication in isolation. Okay, and then we don't have anything yet on the box, not available. But if you look at that, it's telling us that if you are so inclined, this is a little bit aggressive. I generally prefer to wait for a box to form, but you can certainly make a case. You've got 2 out of 3. The big picture bias is saying I'd rather get long, and the zone level is saying I'd rather get long. And at least we have a piece of aggression that's showing buyers are starting to step in. Okay, and again, that goes back to this idea of if we can get 2 of these 3 pieces, whether it's big picture and zone, or maybe it's zone and box aggression, if we get at least 2 of those 3, we've got an edge. So being a buyer here makes a decent amount of sense if you want to do it that way. Okay, so let's run it forward here just for a second, and if we go to this point right here, now we have a buying box that's formed. Okay, so now if we look at this, we have a situation where if we look at it right here, we have a situation where, again, big picture bias is up. That's a bullish indication in isolation. We want to think about these in isolation and then bring them together. Okay, on our zone level, we are at zone support. That's bullish in isolation. And then on our box level, we have a buying box. That is bullish in isolation. So now we've got a 3 out of 3 situation where it looks like a pretty good opportunity to be a buyer. Okay, we know that toward the low of a buying box is a good spot to be a buyer. We know that toward the low of a zone is a good spot to be a buyer. So we've got 3 out of 3. Being a buyer right in this area here makes a lot of sense. Okay, and so what we want to see is, okay, if we bought it somewhere in this area, how does it react? Our next test, our next decision point, if you will, is to determine how the buyers are going to react up here at the high of this buying box. Okay. If the buyers are strong, they should be able to either do one of 2 things. Number 1, form another buying box that would come in up there. Or number 2, start to accept or get comfortable above that box. Now, I like to look for 5 consecutive full bars above there. Until we get that above or below a box or above or below a zone, I consider that there's not acceptance and it's just testing. So what we have here is we have a market that can't get above and accept above here. That's a little bit of a red flag. That could be an opportunity to get out of your trade and lock in some profit when that doesn't happen. It gives it another shot in here, but once again, can't accept price above there. Okay, we're having trouble because again, if buyers are strong, they're going to be able to get above here and start moving this thing higher. What they're finding is that this box is containing us to a degree. Okay, so that's something that we have to be aware of. We give it another shot there, can't do anything with it, and all of a sudden here, now what we get is a scenario where it looks like we might have a chance to break below because the buyers are struggling up here. Okay, that means that the door is open for sellers to come in. But sellers still have to prove themselves here. They have to be able to get through this zone, and they have to be able to get through the low of this box. In other words, they need to get comfortable down in here before really I'm even going to consider thinking about going on the short side. So again, getting long somewhere in here, I think made a lot of sense. It's not going to hurt you. It didn't go to the moon by any means, but at least we have a piece of evidence. We know that we're on the right side of the market and that the door is wide open for buyers to come in. When the buyers can't prove that they're strong by gaining acceptance above here, that tells us we better look out for the other side. Okay? Hopefully that logic makes sense because that's what this is. It's just a puzzle that we're trying to unfold. Okay? So then let's move this forward. So now right here it's around 11:30 Eastern. Now we have a few things have happened. 1, we've accepted price below our zone. That's a bearish indication. 2, we've accepted price below this buying box. That's a bearish indication. 3, we've got this selling box that's formed. That's a bearish indication. So now let's look at what we've got here from a status point of view, and let's see how this kind of adds up and how we can make sense of this. If we look at our big picture bias, okay, because we've broken from that zone, it says in the daily market assistant that it's now called up with caution. Again, that still in isolation is a bullish thing. Means all things equal, we would rather be long, but we'll go against that if we get enough evidence. And here's where that evidence comes in. Now, on the zone level, we have broken below, the zone. That's a bearish indication in isolation. And then on the box level, we are below the buying box. Buying box. And then now we have a selling box that has formed. That is a bearish indication. Okay, so now what do we have? We have a situation where there are 2 out of 3 that are saying we'd rather be on the short side. Okay, so the next question would be, okay, if we want to be on the short side, where would it make sense to do that? Well, in this case, it makes a lot of sense. There's a lot that's lining up in this area up here. We know that if the market comes up and tests toward the high of this zone, now that we are below it, it should offer some resistance. So that's a pretty good spot to look to be a seller. We also know that the high of a selling box should offer us some resistance. So that's a pretty good area to be a seller. We also know that when we have this what's called a reverse overlap, where this selling box is taking over from this buying box, we have a situation here where in this area right there, I'll just color it in to show you what I mean. That's the reverse overlap. That's where 2 boxes overlap each other. In this case, it's a selling box overlapping a buying box. We know that's a pretty good area of resistance. So it's telling us this is pretty good location just from a logic standpoint, and it's telling us from a context standpoint, we'd probably rather be on the short side than the long side. So does it make sense to throw an order in there? I think it does. So if we look at, let's run that forward and see what happens. There's a couple ways you can do it. One, you can throw a limit order in somewhere in here, or 2, you can wait for some kind of a rejection or for some selling to show up, right? And if we run this forward, here's an actual level 2 selling bar that shows up right where we're thinking about that it makes sense to be a seller, right? That's not a bad spot to think about taking a trade. So if you're in that, where's your risk? Your risk is above this selling box, somewhere in here. So if you're in at 68 quarter, minimum you need to have a stop at 69 quarter, probably about maybe 69.50, 69.75. It depends on how much room you want to give it, but you could have a pretty tight stop there, and you have a pretty good edge, right? Doesn't mean it's guaranteed to work. I've seen plenty of these that don't work, okay? But it's an idea where you have an edge there, right? So now it starts to make its way down. There's a level 3 bar. That looks good. Our next question is basically how the market's going to react at the low of this box, okay? And so that's what we're looking for here. And if we run this forward, you can see we test right here. That could be one way to get out of it. Just lock in a quick profit. If you're in at 68 quarter, you're out at 65 quarter. Not a bad little, 3-point trade for risking a point and a half. Not bad. Or you can go for a bigger move, which ends up kind of coming to a degree coming in here. And we actually then, let me run this forward. We get another selling box that comes in here. So again, now it's saying, hey, looking to be a seller in here might make some sense. The evidence is the same, right? So I'm not going to keep going on. This video is getting longer than I anticipated it would be. But it just shows us on a couple different levels. On the box level, it says sellers are taking over, okay? On the zone level, it says sellers are more in control. That's 2 out of 3. We have a pretty good edge. We know the side we want to be on, okay? I hope this makes sense. Let me know. I know it won't for everyone, but hopefully if this resonates with you, let me know if you have any questions on that, and we can talk about it. Thanks a lot. Bye.